So this next video of this playlist, we're going to cover that supply and demand aspect, exactly how you're going to use your supply and demand. Now, the reason we do market structure first, it gives you the context to understand where you can start marking your areas of supply and demand. Now, just like before, let's go back to that monthly time frame. And we'll carry on where we've actually marked up these structures so you can see the process, how we start to bring it all together. So now when we're adding an area of supply and demand, what we're looking for is what we class as a pivot or a range zone. So let's understand how we can mark these out. If we're seeing price making this move up, and then we're seeing a reversal in structure, and we continue down. At this area on the chart, we're going to be able to mark out where we see our new supply is forming. Now we can look at a few different ways. We can look at the candlesticks within. So we can look at a single candlestick like we can identify right here. We have a single bullish candle followed by this bearish candle. That creates an area of a pivot zone for us to draw. And that's the best zone for you to always look to draw on your charts. And this is where we're going to mark out our area of supply. Now we can mark this out as our swing supply in the market, where we're looking for price potentially pull back to. So that's when we see that shift in structure. When we understand this is that reversal in structure where we're making previous higher highs in the market, we shifted, broke that last higher low, making new lower lows and lower highs in the market. So we've gone from the bullish trend to a bearish trend, leaving a new area of supply. And that's what we've created here. So let me just quickly now remove all this. Now, if you aren't sure about anything, then do please go back and watch previous videos or even rewind this to help you understand. So there is understanding our structure already from the previous video in this playlist. Now you understand how you're going to mark up your zone. Now you can use a single candle or a cluster of candles. Either way, it's absolutely fine. Now let's look at understanding multiple time frames. So this is going to create a supply zone here on the daily for me as a swing supply. Now dropping down to a weekly time frame, we can do the same thing where we had identified this structure here to downside. And by the way, these sweep zones of supply are the best zones to trade. And if you haven't seen that video on sweep zones, I will leave a link above now if you wish to go and watch that at the end of this video. But do please watch the rest of this playlist because it's going to help you much more going through each of these videos one by one. But now we can identify, look, there's our last pivot zone in the market. So that's where we see the last candle before the candle drops out. That's a pivot zone. And we can mark this out as a potential internal area of supply. So now we have our internal supply drawn in the market and we have our swing zone of supply. Now, just like before, we can drop down to a daily time frame and we can zoom out and see all this information on one chart. So now you have the higher time frame area of supply there. On a monthly, we drawn out as a swing supply, and we have our internal supply here drawn on a weekly time frame. So we can use those to our advantage, and we can look for price pulling back into these zones. We can start looking for trades. Now we'll go through really how to use this for a trade entry later in this playlist. So keep watching this video so you understand everything about use of supply and demand with what we've gone through in market structure. So then you understand when we start looking at those later videos in this playlist. So next thing we want to understand is if this is our internal area of supply, what's this going to be here? This is going to be our fractal area of supply. And obviously on the way up, we're going to create areas of fractal demand. It's a good way to use supply and demand as potential targets. So when we go through to the model of understanding on entry and exits, we'll look at that as well in more detail. But as we see where we continue to break up here, we can start marking out areas of fractal demand. Now it's areas where price is going to want to run to for potential bounces, okay, and targets. So as we continue to push up, we have a nice sweep zone here of demand. Very often you're going to see a sweep zone like this, okay, can hold price before we see a push through. Now what we class that as is a flip zone in the market. So let's mark this out as another demand zone. So you can start seeing where price is holding, okay, on the way up. Now our last area of demand was here in the market. That got removed. Now the one thing you need to understand with supply and demand, we have to see an opposing zone removing the zone. So when we have a demand removed, that's going to leave a new supply. And that becomes my fractal supply in the market. So now you can start to identify that we removed this area of demand. We had this area of demand here, okay, where price bounced off once. Then we got removed with a wick through on this candle, which then gives us the pullback after the sweep of this liquidity of this zone to push up into this area of supply. Now, the next area of demand we can only mark is this one here. So that means it's a very good chance you're going to find price is going to want to push from this supply down to this demand at some point. Now, we do have a rally-based rally zone right there as well, but this is going to be your better zone to look to run to. So that's how we can look at your different time frames, or this is on a single time frame, or different supply and demand zones on a single time frame. We have our fractal supply and demand, our internal supply here, and this is going to be our swing supply up here. And you can start to see how it maps a picture out for you when you're looking at your charts, especially when you're looking to look for that next option of a trade entry. Now we'll go through that in the next few videos to understand how we'll combine all this together for trade and for potential targets. This is to demonstrate to you how we've now just gone through one single time frame, understanding marking up those areas of supply and demand. Now the best zones of supply or demand is always going to be where we see these sweeps in the market. So we have a nice sweep here in the market, mark that out as a daily sweep. That's always going to be a powerful zone to look for a bounce off and for your targets. You can see we do come into that zone, we have a bounce away, and then we drop to the downside. Now again, we can look for these sweeps. We have a nice sweep here. Where did the market come into? Into this area, and we held and we've dropped away. So that's how we can use supply and demand on the single time frame. Now let's start looking at how we can combine all this with multiple time frames. Now what I mean is when we identify this area of internal structure, we can now look at this area here, okay, on the daily. This zone we can mark out now here as an internal supply on a 4-hour time frame. Now we'll see that disappear, and sorry, that should have been, let me just take that back, not an internal supply, that's a swing supply. Get rid of this. Let me just do this again. I am messing this up. Okay, this is what happens in YouTube videos when we're doing it like this. Now let's go through to the 4-hour swing supply, mark that off, and this supply zone here is then going to be, okay, my area of a internal supply. Now we could mark this full zone out, in fact, as a supply zone, hey, swing supply even. We don't have to mark it. I just did this candle. I just did that to show you quickly. And then we're looking at our structure in the market. Well, we can identify this breakout is on a 4-hour time frame. So I'm going to mark this as a break of structure. And this is going to be my week low on a 4-hour. So again, let's mark that as a break of structure. Then when we start looking at this fractal structure, this becomes my internal structure. So we can have a nice internal break of structure here on the 4-hour. Okay, with our structure. Now we didn't go through that on the previous video, but we are doing it right now so you can see. Now when we drop down to a 4-hour time frame, we'll go back to where we have marked this off, just like we saw on the previous daily time frame. We had those 3 types of structures and also 3 types of supply and demand zones. So now we have this structure where we have that move to downside, a nice breakout, expecting a swing pullback. There's our swing pullback. We come into this area of swing supply, and then we've made an internal shift out. So we go in closer, and again, this was our internal shift out we just saw that created this internal supply. So that's how we start to look at this with multiple time frames. Okay, we're now looking at a daily, a 4-hour, and we can continue to do this, but we'll go through this in more detail in further videos in this playlist. So the idea is just to understand where we're drawing these zones. So now we have the next break here to downside, and the way I look at this, if we go back to a daily time frame, let's find that last area where we saw that breakout, you can start marking this out here again as a next zone if you wish of fractal, and that can become your internal area of supply to make it easier for you. Let's go back. So then we can start to see where internal supply is in the market. And that's why I look at this. And again, we'll do the same thing. We're looking to the left. Where's our area of demand? So let's go back to where we found that area of demand. And again, this is in fact going to be a demand that we can mark out, and we mark that out as our internal demand. Now this demand in fact should have been a fractal demand. Okay, mark it correct. So that's our fractal structure. Now when we go to the 4 hour, we can see that same area of demand on a 4 hour. And this is how you can mechanically do this yourself at any point in time. So there we have price coming into our area of demand. Now we do have some fractal demand we can draw here as well. So we have a nice fractal area of demand that we can mark out here. Let's drag this across. And we can see where price pushes through that demand, and then we have a rally away. So it's understanding all your supply and demand zones where we're going to see price pushing from. Now we don't come back into this previous supply, but we do push into this area here, drag that across, which becomes my fractal supply in the market. So now you have your areas of an internal supply, and we have our fractal supply. Now it's also a good area where we see a high sitting below this area. This comes into understanding more of liquidity in the market. So when we see liquidity below areas of supply or above areas of demand, these very often are great areas we can see liquidity run for potential entry. So there is how we look at different supply and demand zones. Okay, again, your best zones are always going to be where we see potential sweeps in the market for your areas of supply and demand. But here we can identify we would have had our trading range, this move here to downside, there's our pullback. Inside that trading range area, we have an internal fractal supply. There's our internal supply, but there's our fractal structure supply. And that's where we had a reaction of. And again, within this move up, what are we going to create? We're going to create that fractal demand. So we just zoom in. We can identify we had a break of structure to the upside. Okay, this is going to create an area here of demand. Price bounced off and then eventually has broken through. Now this is showing me again where we have this bounce off and a breakthrough. This is what we class as our flip zone of supply. And we can identify that this then becomes a new area of supply, and that's going to be our fractal supply as we remove a fractal demand. Like a note. So that's where we're going to identify a reversal in the market. So understanding where we're creating this higher low, higher high, okay, the market pushes up. We eventually held, bounced up, pushed through, pulled back, and you start to see where we have that pattern again, where we break that structure, pull back into supply, and then we continue to run through, breaking again, pulling back again towards these areas, and a continuation again. And that's all you're ever going to do when you're looking at trading, looking for structures, supply and demand to all line up. So now you've gone through understanding how we look at our structure in the market and where we're looking at your areas of supply and demand. Now remember, your supply and demand zones are going to be much easier to mark out once you've marked up your structures first. You're going to be looking at your swing, your internal and your fractal areas of supply and demand, and you'll be looking to use these in conjunction when looking for potential targets. Now all of this will come clear in the following videos, but make sure you also watch the next video in this playlist because it's going to help you greatly understand how I personally trade using my structures, my supply and demand, and my analysis with multiple time frames for entries.